It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Monday evening. It's February 1st, 2016. Welcome to a brand new week, brand new month. Tons of opportunity for learning and earning across the board today. I hope you guys are ready for another jam-packed newsletter. We got a busy week. We got a busy month ahead of us. And let's jump right in. Starting off tonight, we got oil. Crude oil is bearish with 3 legs down and a spike in channel, actually 2 spiking channels this evening, which tells us to look for the next selling opportunity after a bullish correction off the lows. I got to say, the bears don't even look like they're giving any mercy to these bulls right now. We're going to plan for oil tomorrow if it ever comes off these lows. E-mini S&P is bullish this evening after a measured move and an overshoot of a channel high. Now, with that overshoot, we expect a correction back to support levels before the next leg higher on the E-mini S&P. Pretty much turned on a dime this morning, right at 10 o'clock. We get a plan for the bulls and the bears in the S&P tonight. Gold, the yellow metal, pushed higher aggressively today. It appeared to want to complete a third leg higher, but the close of today's session looks pretty pathetic. So wise buyers are going to be waiting for a trap low tomorrow before looking for the next leg up tomorrow. Pretty interesting chart tonight on the yellow metal. And of course, we'll finish up on the euro. The 6E is bullish inside a range this evening. After 3 legs higher today, this tells us with that trading range, we're ending the session today on the euro. We're looking for bear traps at the lows of the range for the most reliable buying opportunities tomorrow. The bears have a really difficult time in front of them on the euro. As you can see, we got crude, E-mini S&P, gold, and the euro covered for you guys and gals tomorrow. Before we jump into our charts and take a look at strategies for tomorrow, I do want to remind you to make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel, not to worry, there's a description in the description of the YouTube video. You'll see a link that'll take you right over here to our trading blog. So go into the description of the YouTube video, click that link. It'll take you over here to sidewaysmarkets.com. A couple of reasons why. First of all, you are invited. Come out and join us on a free pass to attend our live trade room. If you're not an advanced member and you'd like to see what it feels like, right, to be a member with us in our trade room, grab your free pass in the upper left-hand corner. Lower left-hand corner, you can register for our nightly newsletter mailing list. You'll never have to worry about missing another newsletter ever again. All you need is your name, your email address, and then when you submit your request, make sure you check your inbox. I'm going to send you a verification email. Right below the video tonight, you'll see a spot to download all the charts you'll see me using in tonight's video. How nice is that? Grab those charts below tonight's video. Over on the right-hand side, you can register as a trial member. You can learn all about what it means to be a member here at School of Trade and our 3 levels of membership. Don't forget, we've always got someone standing by 24/7, 365 to answer all your questions. I hope you had a great weekend. It was raining cats and dogs here in Los Angeles. We need the water, obviously. It was a pretty dark and gloomy weekend. I hope you guys had some better weather where you are. Hopefully you're dug out of that snowstorm on the East Coast by now. If you're not, though, sit here tight with me. Let's take a look at the economic news for tomorrow. There's a button right at the top of the screen here. We'll follow that button over here, and let's take a look here now at our economic news here for tomorrow. Tomorrow is Tuesday, February the 2nd. Taking a look at our economic calendar for Tuesday, February the 2nd. As you can see, only a few major news reports are scheduled for tomorrow. We have the 4:30. Well, back up here real quick. We have 3:55 going to be major news. We have 4:30 tomorrow morning going to be major news. Right out at midnight. Right, nothing in the U.S. session. As you can see, we got some Fed speakers tomorrow. We're going to get inventories, the API number tomorrow afternoon. But really, for the most part, it's all coming out in Europe. It's all about the European news tomorrow morning. Starting out actually in India tonight, just after midnight. Then we have the German unemployment change, 3:55 a.m. tomorrow morning. And of course, don't forget about the construction PMI, right, out of Great Britain tomorrow morning. As you can see here, nothing in the U.S. though. All real small stuff in the U.S. and all tomorrow afternoon. So really, for the most part right now, the euros, you guys are the ones that got to worry about the major news tomorrow. 3:55 a.m., 4:30 a.m. by the time I wake up tomorrow morning here in Los Angeles. All the major news will be behind us. And again, no major news on the calendar for us tomorrow in the U.S. session. All right, now that we have our news under control for tomorrow, and again, you can find that link right at the top of our trading blog. Let's jump right in. Taking a look at crude, then we'll go to the S&P, then gold, and we'll wrap up here tonight with the euro. Crude oil is bearish. We have 3 legs down and a spike in channel this evening, which tells us to look for the next selling opportunities after a bullish correction off the lows. Now, boy, I don't know if we're going to get that. Crude feels very heavy this evening. Even after 3 legs lower, the sellers appear to have all intentions to keep pushing lower tomorrow. Our goal is to sell high rather than selling low. So the most reliable trades, and you guys should know this by now if you've watched my newsletter, will come after we get this price up off, right, these lows, and preferably up above the moving average, right, and then sell into those buyer stops. But if we don't get the chance, we'll be looking to sell the highs of the spike in channel, right, with a target down at that third measured leg down around 31 and possibly down to that major support area at 30.38 tomorrow. Now, buyers, you guys really have a difficult job right now. First of all, we got to resuscitate this market a little bit, get a new higher high, and then try to hold a pullback before the buyers can even consider looking at this as a chance to buy this market right now. Whatever you do if you're a buyer, do not try to pick your bottom here right now. You know what happens when we pick bottoms? We end up with a handful of you know what, right? So we don't want to try to pick bottoms on this market right now. Yes, it can keep going lower forever, right? In the eyes of your trade account, this thing can keep going lower much longer than you can stay solvent with your broker, okay? So no picking bottoms here right now. Wait for proof. Stay to the sell side until we get that proof. First of all, let's take a look at what if price goes higher, what if price goes lower. Okay, first of all, the best information we get is staring us right in the face right now. We don't need indicators, we don't need economic news. We have that spike in channel. A spike in channel is a strength pattern. And with 1, 2, 3 pushes lower, and again, these sellers just rounding it right off the top. It doesn't look like they're willing to give up right now, but we do know, though, that, again, historically speaking, remember, as professional traders, we can't predict the future. All we know is where the most reliable trades will come. And the most reliable trades with a spike in channel scenario are going to come after a bullish correction, which may go as high as the beginning of that channel, up around that 32.66. And then we're looking for buyers to fail on the pullback to sell it back down, right? So the ideal scenario would be if we see this price jump up off that low, and then, of course, right, buyers fail to hold that pullback. So here's scenario 1. Scenario 1, right, if price goes higher, we jump up, buyers try to buy that moving average, right? They're unsuccessful, and we can now sell it. Remember, the goal of day trading, the goal of anything is to sell high, right? Not sell low. So ideally, we want this price to get up off that low and then fail to hold that pullback, and we can sell it, right, when it comes back down. The next scenario would be if they do hold, right? If they do hold that pullback, then that's going to give all the other bulls, now you've got the opportunity here to be a buyer, right? I always say be patient, right? Let the first pullback go. Grab the second one, right? That'll be a lot easier for the new traders out there. And then you got some targets waiting for you overhead, right? Again, look for those pullbacks to hold. And then, of course, your second and third pullbacks will be a whole lot easier to take higher. Now, be careful, though, if you're a buyer. You've got resistance here overhead, especially. This is always going to be one of the more difficult areas around that 32.66. You have to remember on a spike in channel, it's going to feel very bullish until it starts feeling really bearish, right? So basically what happens is you've got that spike in channel correction area back at 32.66. Right? Again, look to hold the first pullback. That gives you the information now. You can safely buy this market. But do not try to buy up around that 32.66. You really got to stay patient. At that point, The sellers are going to be waiting for those next pullbacks to fail so they can sell it right back down. Remember, a smart seller right now in this oil market is just going to simply wait for that price to go all the way up to that 32.66 area, and then we'll start watching for the buyers to start breaking down, right? It'll slip below the moving average, then hold the moving average back on the opposite side, and we're back to being bearish. So, again, as price goes higher, buyers want to wait to see a pullback hold, then they can buy potentially all the way up, right, to that 32.66 as long as you guys get the proper signals, right, and the proper proof where you need it. Again, if they can't hold that pullback, though, that's where the sellers will be looking for opportunities to finish off, right, that third measured leg on the way down. Honestly, the hard part is going to be if we just take off the downside. You know, this is always going to be the hard part. Again, the goal is to sell high, not sell low. If we take off the downside, I always have a hard time telling people in this newsletter to sell when it goes lower. So what I'll be looking for tomorrow is, if it goes lower, is to look for small, measured corrections, right? They won't be very large. And then again, on a micro scale, we're looking to pretty much do the exact same thing. If it slams lower, just you can't sell that low. You can't do it reliably. That's the key. I realize it may just keep going lower. But if you make it a habit of selling low and buying high, you're not going to be a very successful anything in this life. So if it slams lower, look for a little micro measured correction back up, and then look again, right? The rule of thumb is always the same thing. Look for it to go up. If they can hold the pullback, wonderful. Sellers are going to see that price slam down. There'll be some profit taking, right? Parks back up, and then we'll look to sell into that failure. The key tomorrow is going to be, it's going to be a dream come true if it spikes higher, and then we can sell it off this low. If it goes lower, we know where they're trying to go. They're trying to make that third symmetrical leg down, and then if they make that third symmetrical leg down around that 31, it's just rinse and repeat, right? Expect sellers to take profit, expect price at that point now, right? If we do complete that 31, right, 30.92, again, expect price to go up, profit taking from the sellers, bargain hunting from the buyers. Again, if the buyers can hold, then they know they have it, right? If they can't hold, then of course sellers just continue, all right? Just keep wringing them out to dry here on the way down, right, to that 30.38. You've got a good plan on crude tomorrow. Just make sure you follow that cardinal rule, right? Yeah, that's right. Buy low, sell high. And right now, being a buyer is very, very difficult business here on the oil market. Almost feels like they're making a point of this after last week's little shenanigans out of Russia, right? And the OPEC members trying to fan the fear flame last week, getting that price spiking up like that. It feels like they're making a point back to that $30 a barrel. We'll see if the proof, right, meets up with what my thoughts are for that oil market. Again, I always have to wait for proof like everybody else does. Moving forward here on the S&P, we are bullish this evening, but after a measured move and an overshoot of the channel high, we expect a correction back to support levels before the next leg higher. The E-mini pulled a U-turn this morning after 10 a.m., right? News was released, and it immediately completed a channel rotation that is literally on the front of a postcard, right? I mean, it's picture perfect. 10 a.m. news comes out, just shoots higher, right into an ABCD move higher, right into a channel rotation higher, overshoots the high, overshoots the measured move, and then you can almost see kind of that rounding top, right? That like rounding top to it. Right, all the wicks start showing up, right? It was pretty easy to see. And again, I don't need the news. I don't need indicators to tell me this. Look at the candlesticks. You can easily see it. Measured move higher, right? Overshoots the measured move, overshoots the channel, rounding candlestick wicks, right? Slams back down. This is a classic example where an overshoot results in an overcorrection, right? You gotta be a little bit silly to buy that pullback, right? Unless you got something that I don't know. But I'll definitely be suspicious of that pullback after that overshoot. Now we're getting what appears to be the follow-through here for that measured correction. All the buyers right now have their eyes on this area, that 1925 area, 1926 down to 1923. That's where all the buyers are waiting for, because this literally has potential now to be measured move up, measured correction back lower, and then into another, coming in tomorrow, another measured move higher. Now, put those all together now, dot the I's and cross the T's. Are you seeing what I'm seeing? Right? Now we have a larger measured move to finish off, right? Maybe by Wednesday, right? Wednesday, we'll see. This is the S&P, but the reality is, though, is this is an S&P that seems to be drinking its coffee each morning right now. It's definitely been a mover and a shaker in 2016. All right, so buyers want to see this correction completed, followed by sellers failing at the moving average, right? So buyers right now are looking for this measured correction, A, B, C, D. Then they're looking for those sellers to fail, right? Sellers to fail so they can buy into their failure. It's kind of the opposite of crude, right? We want crude to go up so the buyers can fail and we can sell it back down. We want the S&P to go down, the sellers to fail, so we can continue buying it right back up, right? That's going to be the ideal scenario here for the bulls, right? Buyers want to see the correction, followed by sellers failing at the moving average for the first clue to go higher. The most reliable buying opportunities will come after a new higher high, right? That new higher high, moving average comes in, they hold the pullback, right? That'll be the most reliable buying opportunities. Okay, so what's going to happen is we're going to see this measured correction. If the sellers cannot hold that next pullback, seller failure, that'll be your first opportunity, followed by what is the more reliable trade, a new higher high. Buyers hold the pullback, right? And we finish the move higher. So again, opportunities to buy with seller failure. And then again, if you're not comfortable with buying during seller failure, wait for a new higher high, right? New little swing high there. And then look for the next pullback to hold. That's the pullback that'll be the most reliable. All right, guys, sellers. What about the sellers here right now? Well, the sellers are going to be looking for that pullback to hold, right? So we get the measured correction, right? Price comes down off that high, measured correction, A, B, C, D. But instead of failing now and going higher here, instead, moving average comes over, sellers hold that pullback, right? If the sellers can hold that pullback, this is going to threaten now to run out all the buyers who got in too early, right? They'll run those stops to the buyers, and then we'll start attacking, right? 1918, 1912, and then there's a major swing low down around that 1902. So really right now, sellers have to hold a pullback if they want to have any chance of getting this price to go lower over the long term. We do expect to see this measured correction. Once we get that measured correction, we're going to get a lot of information that's very useful for us tomorrow, right? Sellers fail, buyers will attack. If sellers hold, just be careful of selling into support. Sellers will attack down to that 1918, 1912, and then of course, right, 1902, 87. Don't forget to leave a runner if you get that seller failure, because that's going to become a larger measured move. A little bit difficult to tell where it's going to go right now. We don't know how far that pullback will be, right? But assuming it's a relatively significant correction here, right, we're talking around that 1950 area, right, to the upside. All right, guys, got a good plan on the S&P here now for us. How about the gold? What are we going to do with this gold market right now? Gold pushed higher aggressively today, and it appeared to want to complete a third leg higher. But the close of today's session looks a little bit concerning. So wise buyers will wait for a trap low before looking for the next leg up tomorrow. Gold had no trouble completing the measured move this morning, and then it held strong on the pullback, around noon this afternoon, right? Then it shot higher into the close today. But the closing candle really leaves the buyers wondering if this move is over in the short term, right? Definitely a bullish market, but this move might definitely be over in the short term. It's likely that the buyers will see this price as too expensive to buy right now, so they'll want to wait to trap low just to get a cheaper price, right? Down around 1125 support, right? Sellers, you guys can look to get short into buyer failures at these highs with a target down around 1125, but you got to be careful because this is a bullish market right now. So looking at this environment we're seeing on gold right now, very, very bullish environment, as you can see. You'll notice here, jumps up A to B, C to D, lickety split. I mean, literally, they had completed a measured move higher before 10 a.m. this morning. We overshoot, right, that measured move. We go right up to the highs of that channel. And at this point now, after we've completed a measured move, usually, right, look at the S&P, usually we get a measured correction. Right? We break down. Obviously, we can't hold the pullback. That is to be expected after a measured move overshoot. But you'll notice, though, boy, did they hold this low very, very well. And this is really what I think to be some of the most important information right now on gold. Right? Here's the way that I look at this. We have a major swing high from the earlier on in the session. In fact, the buyers even came back to use that, right, as a support level. So we draw that line across. We rocket higher, pull back lower. Again, after a measured move, this thing, what should have happened, well, what typically happens, is we see it trap low, right? Dig into those lows and then shoot higher. So the reality is this is a very bullish market right now, right? A very bullish market. They couldn't break below what I call a reversal line, right? They couldn't break below the reversal line. Right? They held above the reversal line. They didn't even complete a full measured correction and then shoot right back up to those highs. No question at all about who has control right now. But then look what happens at the end of the day today. And we saw this on gold last week too. It kind of hobbled into the close. As you can see right now, right? There's your prior major swing high. Right? And look at the close. We see a strong push right through it, and then almost as if everybody walked away and said, nope, that's it, because look at the candles that closed it up. Real strong red candle here right now. So that leads me to believe right now that this is, again, 1, 2, 3 legs up, right? Do we call it a market mistake? I don't know. But what I do know, though, is that these bulls looked really, really strong as of about 11 o'clock this morning because they didn't even pull back to test that reversal line. I mean, again, you'd expect under normal conditions here a measured correction, trap low, right? What I call trap low, get below some of those prior swings, right? Run out some of those buyers and make them get back in with you. Every buyer, though, was let off the hook, right? If you bought any of these pullbacks here, your stop is still intact. What that tells me is that when we got back to these highs, a lot of these buyers who made a lot of money on the way up, I think they saw that as being kind of a gift, right? Another way of thinking of it would be sellers who sold this high, right? It's a measured move, for crying out loud, right? I wouldn't sell it in this bullish market, but hey, I'm sure a lot of sellers probably tried to sell that high, right? Expecting to get, think of it this way. Sellers sell that high, they expect to get a complete measured correction, but this bullishness completely catches them off guard, right? By the time they get back up to their break-even point, they go, okay, I'm good. Get me out for break-even. I'm just happy to be surviving this thing without a loss, right? Because clearly it's bullish. So now the sellers are out of the way, right? Buyers are most likely still in this market. The only way I can justify it is you got to see what happens at this pullback, right? We got to see what happens at this next pullback to the moving average. It really takes a lot of. I'm going to get a headache trying to think of a scenario where this is bearish right now. It's very, very bullish based on everything we've seen right now. It appears all the buyers are still able to be in this market, right? So we're going to have to trap low to get those buyers to be even interested to go higher again. It also appears the sellers who tried to sell that high, they got out by the skin of their teeth, right? They were expecting a little bit more of a bearish correction there, but guaranteed that big bullish move surprised them. And so being able to get out at point of entry sounds good to me. If I'm short and I'm getting out, I'm going to buy my way out, right? That explains that bullish candlestick, and then it also explains the red candlestick, meaning that the buyers who were let to stay in that trade, right? The buyers were allowed to stay in it. They weren't forced out. They took their profit. So sellers are out, buyers are out. It's all going to be what happens at this next moving average. On this next pullback. if we hold this next pullback, I wouldn't be surprised at all to see those bulls jump all over it and complete that third leg higher. Just because, again, I think the sellers realized they were wrong. I think the buyers, right, they took their profit at that high. The only thing is, if it was me, this is too expensive. So what I'll be waiting for tomorrow is I'll be waiting for a correction lower, right? I want to see them really run some of these bulls out of this market. I think they've gotten off pretty easy so far. So I'm going to be watching this area of interest down here at 1125. The ideal scenario for those buyers tomorrow is going to be to dig on lower, right? Measured correction lower, right? Literally make those buyers get out of their positions and then make them get back in again with me, right? Think about it. And if you're a buyer who saw this as a gift from the trading gods, you're way too expensive now, right? You're not going to want to buy where you just got out, right? You're going to want to wait for price to go lower as well. Now, again, I see this market being very, very bullish right now. If you see a strong bullish reaction to that moving average on our next pullback, I can't say I wouldn't blame you for taking the risk, right? I mean, the reward is worth it. You've got a pretty good move higher for that 33.4, major resistance overhead, right? Don't forget channel rotation, right, up at the high of that channel. So again, look at that next pullback to the moving average. If we get a nice strong candle off it, again, I wouldn't blame you. It's a little bit too expensive for my liking right now, and I think a lot of bulls are probably going to mirror my sentiment on that. They're going to want to see it trap low, if not now, later on tomorrow morning. And again, we'll go forward from there once we get some more information. But stick with the buy side right now, though. The only scenario I see for a seller right now would be aggressive here. New lower low. We hold the retrace. You can sell it down to that 25 area, but boy, that's about all you can really expect as far as reliable selling opportunities here right now on the gold. And then wrapping up here on the euro tonight, get a few minutes left here on the newsletter tonight. Thanks for sticking around with me. Euro is bullish inside of a range this evening after 3 legs higher today, which tells us to look for bear traps at the lows of the range for the most reliable buying opportunities tomorrow. We can easily see this market is bullish. We get a major channel up, 3 measured legs higher today, which ended in a trading range. No surprise there. After 1, 2, 3 pushes higher today, 1, 2, 3 pushes higher today, these buyers have to be just completely tuckered out. We can easily see we're bullish. Major channel, 3 measured legs into a trading range. Let's use range rotation, right? And range rotation says we just came off the highs dramatically, I might add. Look at the range right now, right? We finish up. We go from, and this of course can be range rotation. We go from the high down to the low, back to the high. Look at this green candle right there, kids. We don't see this very often. Look at this. Look at the size of that green candle, and there's nothing for follow through. Think about that for a second. When do we ever see all of that bullishness and see no follow through? Yeah, exactly right. Probably at the end of a 3-legged move, right? Third leg is really, really powerful. First leg's market makers, second leg is going to be trend followers, third leg is late adopters, right? It's a sloppy seconds, right, as we say in our live trade room. So it's very, very easy to see here. There are plenty of buyers right now, right, following it up, but they're getting nowhere. Right, getting nowhere. Big, solid green candles immediately responded with red candles, which is just not typical for a bullish market. That leads me to believe here a measured correction is going to be in store, right, before we make that next leg higher, right? So back to our text up here, use range rotation. We go from the high down to the low, back up to the high. We're expecting to go back down to that low. And remember, in a bullish market, the most reliable trades will come after a bearish correction. Remember, the old saying is, right, buy low. We want price to dip back into that 8,800 area, 8,748 area, and then from there we're looking for seller failures, right? Looking for seller failures at that point now, right, to be a buyer right back up. It really is that simple. Right now for the buyers, wait patiently here, right, to get down to that low. Look for price to trap some of those prior swings, right? And then look for buying opportunities into seller failures. Very, very difficult here right now to be a seller. Sellers have a big challenge ahead of them tomorrow because there's not a lot of open space. If price does go higher here, right, if we do break out to the upside, we're looking for that moving average to hold, right? And then we can look to buy those dips on the way up to 94.58, right? 96.85, as you can see overhead. If this thing does not complete its measured move back down, this now looks very, very bullish, right? Pendulum swings, and it will likely take off to the upside here if we don't complete that measured correction. Again, the smart buyers, though, will be waiting for that correction lower, right, and then look to buy into seller failure and then buy those pullbacks after we see the proof. Guys and gals, thanks so much for sticking around with me here tonight. Thanks for spending your evening here with me on the nightly newsletter. We get a busy week in front of us. Make sure you come back and join us. Tomorrow morning, we open up our trade room at 8 a.m. Eastern Time. Tomorrow evening, we'll do it again every Monday through Thursday evening at 8 p.m. Eastern Time. Before I say goodbye, don't forget to register for the free trial on our website. Learn more about beginner, intermediate, and advanced levels of membership. And as always, I've got someone standing by 24/7, 365 to answer all your trading questions. My name is Joseph. Rest up tonight. Another busy day tomorrow. Be well out there. Be nice to each other. And be here with me tomorrow. Same time, same place. I'll see you next time, guys and gals. Adios, amigos. Bye-bye for now.